Real estate is critical for military families. So whether you're looking for that perfect home or whether you're looking to invest in real estate as a long-term plan to build financial wealth, I want to cover the topic of how real estate and the VA loan can take you there. Today, we're talking about using real estate and using the VA loan to create security and long-term wealth for your family. We want you to think about this as a long-term plan, a retirement out for you. So not only that, but I know for the past year, interest rates have been through the roof and they've recently been coming down, right? So they're in decline and they're volatile right now. And a lot of us who already have VA loans are getting those calls of come refinance with us, explore your IRRRL benefit and streamline a refinance with us, come lower your interest rate. Well, that's all well and good, but a lot of times there are hidden fees in place there. So we're going to talk about the do's and don'ts of refinancing to make sure you understand when it's right for you and your family to take advantage of that. So a lot of families don't realize how beneficial the VA loan can be, not just for buying a home, but also building sustainable real estate investment strategy. But today we've got the perfect guest to break it all down. Our guest today is Bryan Bergjans. And if you're inspired by what you hear today, we're going to give you the opportunity to meet with him directly or meet with me directly. I'm honored to have Bryan on the call. He's a friend who I've known for several years. We met at a conference a while back, and he is also a national advocate for military and veteran home ownership. He's the kind of guy who will give you his email address and say, if you have any questions, I don't care if you work with me or not, you can email me and ask me. Bryan is also a service member. So he has 20 years of serving the United States Navy as an officer in the reserves. So we are very blessed to have him serving both us as a community and our United States Navy. He's helped countless families across the United States use the VA loan to build wealth through smart real estate investments. And I'm just really excited to have him today. Bryan, how you doing?
I'm great. Thanks for having me.
Live from, do you want to share where you're broadcasting from today?
Yes, I am live from the Contemporary Resort in Disney.
Okay. The kind of guy who will take time out of his family vacation to come live and educate everybody here on the VA loan.
Yes, so ma'am.
We're excited to have you, Bryan.
Thank you.
All right. So if you guys have questions for Bryan, you can go ahead and start throwing them in the chat, but we have some topics we're going to cover. Bryan, my first question is, a lot of military families wonder whether or not they should rent, especially during PCS season, and especially with the market as crazy as it is right now. What's your take on it?
I think, timing is everything, right? When you want to rent versus buy, I think you need to look at a lot of different factors. How long you're gonna be there is a very important one. I know a lot of military jobs only have like 2 or 3 military bases that they support. And so, you're only going to go 1 of 3 places for your whole career. And, that could factor in. But I do believe that you need to look at where you're going. And then also to the availability. Right now we're in a very competitive market where inventory is very low. And, schools, safety, distance, all this kind of stuff is very important for any homeowner, most importantly a military family, right? So you need to just kind of take a look at a lot of the, your timing is important, and if the inventory is not there to support the opportunity to buy, and I mean a good opportunity to buy, then unfortunately it didn't work out for you this time and you got to rent, and you just plan for the next one. But if it does pop up and you do have an opportunity to take advantage of the market and get a great location with great schools and stuff like that, then you need to look and see if your finances are in order enough for you to purchase a home. Because I will always say, having a home and making a payment toward equity is always going to be better than renting and paying someone else's mortgage. It will always be, right? So, but timing is very critical and important.
Sure, I agree with that. I would say that, you're getting this tax-free BAH funding every month for being an active duty family. And if you can afford to buy it, you should definitely go for it. So, and especially with the VA loan benefit as a tool at the tip of your fingers, can we talk about what some of those advantages the VA loan offers that renting doesn't offer?
Absolutely. Well, I mean, first of all, it's for the most part, you have little or no money down coming out of your pocket, right? So,
Yeah.
I know a lot of people say no out of pocket, zero down. Well, while you might not be putting a down payment down, you will have, some costs associated with closing on a real estate transaction. However, it's very limited. So your out of pocket expenses are very minimal. So, your break even on buying is pretty quick, comparatively speaking, to someone who just threw, 20, 30% down on a conventional loan, right? So, and then also too, if you decide that, when you 3 to 4 years later, you can use the benefit again to pay zero down and very limited closing costs on your next property. And if your situation warrants it, meaning the entitlement piece can afford it, help you with it, then you can carry two VA loans at the same time and rent the one out. So
Yeah, I think you just also kind of squashed one of the big myths is that you can only use the VA loan once. Does anyone here believe or have you heard that you can only use the VA loan once or for one property at a time? Yeah, I'm sure you can throw your hand up or put an emoji in the chat if that's your circumstance or you've heard that. Because what, Bryan? It's not true. Okay.
it's not true. It's not
It's
true.
not true. Do you want to address that really quick? I know that's kind of a random thing to pop up for us, but a lot of people are probably under that misconception.
It's crazy some of the myths that are out there with VA loans in general, and I hate even calling them myths because we've been talking about them for so long. They shouldn't even be myths anymore. So I pound the table when I hear the word myth because for the last decade we've said the same. Our industry has said the same things over and over again. You can have them one at a time. You can use it more than once. I just think that now that the VA loan's gotten more popular, people understand, the flexibility that it really does have, and that a lot of the things that people heard before just weren't simply true. And I remember, this was about a decade ago, not to date myself, but most of the people who have served, like my dad's generation, et cetera, that served in the late 70s, early 80s and were reservists, first of all, didn't even know they qualified or were entitled to the VA home loan benefit. And most folks that I talked to said that they were going to use it for their forever home because they thought they could only use it once.
Yep. So talk to me briefly, Bryan, about cash on cash return and when it makes sense for a family to rent out something that they've purchased versus actually renting themselves.
Well, I think a couple things. One, if you noticed, rental, rent seems to be going up year after year after year after year, right? Cash on cash return is simple. It's how much money did you come out of pocket, when you purchased the home. And that's the beautiful thing about VA. VA, it's limited. It's very minimal. Sometimes you can finagle your way to absolutely having nothing out of your pocket, which are, some very nice situations. And then sometimes it's, 1 to 3,000, depending on the situation. But if your net cash flow, because you're renting it out, is 14,000 a year, then your cash on cash return from your original investment is like 486%. So why wouldn't you want to do that? Again, it comes down to the market, where you're at. Were you able to be one of the lucky ones to get a great location around schools where you can constantly rent it out? Especially military, renting to military seems to be a good recipe. If you get a great location that a lot of active duty folks would like to move to, then when you PCS, you can rent it out to another military family that's PCSing there. And you can do that for as long as you want to be a landlord. And the beautiful thing is, as your cash flow increases, your appreciation increases, and your equity position increases. So it becomes a legit, tangible asset for you down the road.
Yes. So for families who have not used the VA loan before, can you talk about what the concrete differences are between a VA loan and a conventional loan, like the no down payment, the rates, and all of the different benefits that loan type gives active duty families?
Yeah. So, one
Or
of the
I'm sorry, I should say military families, not just active duty. That's on me.
yeah, that's because reservists do qualify to the VA home loan benefit.
Yeah.
Uh, one of the things that I like most about the VA home loan, let's take the fact that you got zero down payment, which is the ultimate plus, right? But I think too, especially historically, the underwriting guidelines, which was the magic book called the VA Handbook, and underwriting guides tend to be more liberal for VA, right? Broad in nature on purpose, to find more ways to saying yes for military families when it comes to financing. And that's really been the claim to fame for, VA, the 1-2 punch, right? You got 0% down, and then you got very broad underwriting opportunities to get to a yes for military families. And let's be honest, it's, some of these scenarios are very unique, right? You have dual income going to single income, moving into another market. You got non-taxable income and BAH and BAS. So you got a lot of different things flying. And so the underwriting requirements, being very broad, do help execute on more VA, which is great.
Yeah. Thank you for sharing that. And I want to explain too that the reason why it's preferred too, or one of the reasons why it's preferred, is because the loan is guaranteed by the government. So basically what that means is if you default on the loan, the government guarantees they're going to cover, I think it's like up to 25% of the home value. So when sellers are selling their properties or builders are selling their properties, that's a preferred loan type for them to get under contract and to sell the property to. So you all automatically have an advantage when you're going into the market just by using that loan type over your competition who are other buyers.
Now, if I would,
And I'll go ahead.
can I add something real quick? So you hit a great
Please.
point there. So the VA guaranteeing 25% is the reason why you get favorable underwriting opportunities for military and veterans. So
Yeah.
that was a good add there. Thank you, Kimber.
Yeah, and as a home buyer, if you're looking at, you'll see like D.R. Horton is a really good example. They build a lot of homes and they target the military community, and they offer, $0 down payment, and plus we're going to give you 10 grand or so many dollars in incentives to buy from us. If you notice, they'd only do that for VA loans. They don't do that for conventional loans. They don't do it for FHAs. It's just they offer other things to those loan types, but you're not going to get that if you're not using the VA loan. So just be aware that you have that big advantage when you're heading into the market. I'll personally share with you guys, I've used the VA loan probably 4 times, and I do have a property that is, I have concurrently 2 homes under the VA loan, and I have sold a home that was a VA loan, made a 6 figures off of that home. And so glad I did. If you ever PCS to Jacksonville, Florida, you better buy a house. I will kick you if you don't, because you will be shooting yourself in the foot financially 3 years later when it's time to leave. There are other really hot markets that you should definitely be aware of and be ready to, pull the trigger in if you're available, if it comes your way. So personally,
Can I share a story?
Yeah, go ahead.
Yeah, I want to share a story real quick. When I built my very first house, my realtor and the builder both knew I was military and I was in the reserves. And not a single one of them offered me the opportunity to do a VA home loan. And I did an 80-10 to build my house.
Gosh. Yeah.
So the funny part is now you fast forward where I'm at today, championing the VA home loan benefit.
Yeah.
And my very first house I built, I didn't even get it offered to me by everybody. Even the mortgage professional that I used at the time knew I was in the military, and no one even offered me a VA home loan.
Did they just not know? Maybe they didn't know.
And I was the blind leading the blind at the time. I was a newbie in this whole game of mortgage, so I didn't know. But fast forward, my second time I built a house, I had to educate the builder on, how it was zero down. So, builder requirements when you build, they do, especially non-military friendly ones, they do require substantial down payments for them to start construction, right? So I had to meet them in the middle. But, you know, what I always say is people don't know what they don't know. And you can't assume that they know about the benefit, you know, the VA home loan, etc. So as a consumer, if you're going into something and you know you want to use it, it's better to start off with your cards on the table.
Yeah. Put a 3 in the comments if one of your biggest takeaways of being in this community is that you've had to learn how to advocate for yourself. A number 3. And that's what we're here to do, is help empower you guys to make sure that you are capable of advocating for yourself in these situations. So I'll tell you briefly, we bought a house in 2019 for about $200,000. I would say that home is worth anywhere from $300 to $320 at this point. So that's only 6 years into an investment, and it's passive for us. If you're thinking about, you know, getting that first starter home, don't sit on it. Don't sit on the opportunity, because every year, generally, it's a safe average to say that home is going to grow about 3% in equity every year. Bryan, you can advise on that too if you want to adjust or correct my generalization there of the average real estate market growth.
I think historically, you're probably spot on. It's probably, you know, 4 to 5%. I think I've seen a chart before, and there's only been a couple years historically since single family residents have been tracked where real estate has either been 0 or a negative. I mean like maybe 2 or 3 years on this chart. And I'm more than happy to share that chart with you guys. After this call, I can get it to you, Kimber, so you can see, and it'd probably be good for a lot of people to see it. It's kind of eye-opening.
Yes.
But historically, maybe 2 to 3 years on this chart have been in the negative, but everything else has been either, you know, positive, some sort of a positive return on your investment. So, which is great. Now we're seeing, you know, the last couple years, just due to, you know, inventory and stuff like that. Anyone who's gotten into the real estate market has seen substantial equity growth in their properties. So, and you probably will continue to see, you know, above average returns on your real estate investments over the next, you know, I don't know, 2, 3, maybe even 4 years, depending on when we can get this inventory stuff right-sized, you know? So
yeah. National home shortage, if that brings some clarity into what's going on right now. I want to now address the 40% of you who already have VA loans and who may have higher interest rates and are thinking about refinancing. So I did not know about the IRRRL, and I missed my window to refinance one of my properties, or the first property that we ever bought, when we had those super low interest rates around 3%. 3 and 4%. And I wish I had known, like I could kick myself. But it, you know, things happen. And that's why I want to prevent what happened to me from happening to you, and make sure you guys are set up and you know what the IRRRL is. So Bryan is the best person to talk to about that. You may have seen, if you guys are watching the news, and if you're not like a big news watcher, you need to find an outlet to stay plugged into what's going on with the interest rates on a day-to-day basis if you have a loan and you're not satisfied with your interest rate. So the IRRRL is the interest rate reduction refinance loan. Let's go ahead and have Bryan talk about what it is, how it works, and how to be diligent to pay attention to when it's your opportunity to refinance.
So we talked earlier about kind of the benefits of the VA home loan benefit in general, right? And this would be one of them, right? So you got 0 down payment, you know, fantastic underwriting guidelines to help you get to yes more. But then most importantly, as a consumer who's already in the program, you have the opportunity to do an IRRRL, which I can tell you right now, it should be a very seamless and stressless process. So this is where I offer my support. If you ever find yourself going through the process of an IRRRL and you feel like it's not very seamless, or you're having challenges or issues, please reach out. I'm more than happy to, you know, kind of dissect maybe what's going on, and help you maybe, you know, push away some of the roadblocks and help your lender, etc. Because it really is. It's supposed to be streamlined. That's the whole point. It's supposed to be streamlined, right? No appraisal, etc. All this good stuff, and it's supposed to be really easy. And the great part is you don't have to do an appraisal, and you get to take advantage of the extremely low rates. The key, though, is to figure out timing and what makes sense. We're about to embark into a very uncharted territory over the last couple years, right? We're going into a environment where we're anticipating lower interest rates. The introductory, market rate where they're trying to get you to call back, right? And, hey, listen, it's, we can, call it a car deal or whatever we want to, but their tactics are their tactics. But as a consumer, I always say if it looks too good to be true, it probably is. But when you call them and they offer you your say, hey, the rate's at 4.5, my question would be then, well, how much is this going to cost me? Because at the end of the day, you can lower my rate to whatever it is, but if it costs me 20,000-30,000, my payment savings really aren't going to be that much. Number one. Number two, just from a break-even analysis, it's going to take 7 years for me to break even on my money that I just did, right? So you have to be very mindful of the total cost of doing business and what that translates to payment savings, so you can really dive into.
What are they charging you for?
So your typical costs are going to be, you got title and closing. You're not going to run from that. You got your lender costs, which underwriting, processing, etc. And it really just depends. And we have lenders on here, so I'm going to, do something as a lender that'll show you my advocacy efforts here. The home team should win every time when it comes to IRRRLs, meaning that whoever services your loan should be able to provide you the best path forward for an IRRRL. Because there's so many things that they can do. You have a current escrow account. They can net the escrow on your payoff, so it doesn't look like you're rolling in a lot more into the new loan. Typically, your servicer will waive lender fees. I hear a lot about that, and that's typical. They already have your loan. They want to keep your loan. They want to keep you as a customer. VA customers are the best. We have the lowest default rate, or they want to keep you. So then there you go. Also, too, they got national relationships with national title companies, and they can significantly reduce your title costs. So instead of going to a new lender where it might cost you, and it's not cost because you got escrows, you got to start over, you might roll in 6 or 7 or 8,000, depending on what market you're in, into the new loan. Right? So your payment savings need to be substantial enough for you to feel like you're winning on that, where your current servicer can probably keep that down to half, maybe even 40% of that with $3 or $4 grand. You know what I mean? So if you're really looking at doing an IRRRL when the rates get down where they need to be for you to feel good about it, give your person that you're making your payment to first shot at it, because they typically can make it look a lot cleaner on a closing statement. Not to say brokers can't, because they got, there's a lot of tricks to the trade to costs and stuff, but, typically you're going to find your best with your servicer.
So we need to shop around. We need to know the questions to ask, including what are my title and closing fees going to be? Mm-hmm. Are you asking me to buy down my rate? Because I think a lot of us as consumers don't understand that occasionally if someone's approaching you with a 4.99 rate, that actually includes you paying to purchase that rate. You have to, buy, what are they called? Basis? Is it basis points?
Yeah, discount. So it's a discount point. Yep.
Buying discount point.
Yep.
And I would believe that sometimes we don't understand that's actually what we're paying for. So asking, am I paying for discount points? Am I paying for the lower rate? Get this data and then ask your current mortgager first if they can beat it. Get it from them first and then do your due diligence.
One discount point is 1%, right? So if you got a $300,000 mortgage, every time you pay one discount point for a lower rate, that's $3,000. So what does that translate to payment savings is really what you got to kind of figure. Yeah.
Yeah. I would really love to look at a real world scenario of this to like understand, is it possible? Or how do I know when it's possible for me? So if you got an interest rate this year that's, 7% or above, how would I know when it's worth refinancing for me?
I gave a scenario that we could possibly pop up here. This is a good illustration of a example, one that could be possible within the next, 6 to 7 months for anyone living in Texas.
Okay.
But
What are we
here's what
looking at?
so you got your current situation to the, your current loan, right? So somebody bought last year, or maybe the year before, 250,000. Let's just go last 12 months.
Okay.
250,000 at 7.25 for 30 years. So the principal and interest payment 1705, and we estimated taxes and insurance. So let's just put that out there right now. Every county's different, stuff like that. So you have your total, principal, interest, taxes, and insurance payment. Now you're sitting there wondering, okay, when's the right time for me to take advantage of the VA streamline, right? And so this is where I think a lot of people get blinded by the fact when they get in, someone calls and says, hey, I can lower your rate by 0.5%, or I can lower your rate by 0.75. And the reality is, for folks that are sitting there, with loan amounts of 500,000 or greater, every half a point makes a significant difference, right? From a payment savings perspective. But when you're like the median household across the United States, or the median household in San Antonio, Texas, or, Jacksonville, Florida, or wherever, where, homes are reasonably still priced and, mid to high twos, low threes, half a point's just not going to cut it from a payment savings perspective or worth your time, right? So if you look to this illustration to the right under Earl, you'll see, current loan, which is your payoff, roughly about 247, 580, and this is just based off AM schedules and etc. Right? I try to get it as close as I could, but notice the prepaids and closing costs, right? See how quickly that can add up, and that's made up of, establishing a new escrow account or a partial escrow account, depending on if you're going with your current servicer or a new lender. And then the closing costs, which are title company fees, title insurance, closing fees, lender fees, typically underwriting processing, etc. And that stuff can get pretty high pretty fast, right?
Yeah. Yeah, it can.
And here's a good, whether it passes the eye test or not. If you're at a $250,000 loan amount and your prepaids and closings, or your new loan amount's going to go up, $12, $13, $14,000, you got to look at your closing statement, right? And just make sure that you're not paying any weird or stuff you just weren't aware of, like a discount point buying your rate down, or origination points, etc., which is, a fee, a percentage of a fee.
Sure.
But if you notice on this one, reducing the rate 1.25% to 6%, the customer would realize a payment savings of $183.40, right, a month. Now, to me, 183 could be the world. To Kimber, it could be another thing. So you have to really figure out for you what your magic number is. Does this make sense for you? At 183, rolling in $6,000, I'm going to break even in about 3 years, which is typical. Like 2 to 3 years is kind of a typical time frame. So 1.25 rate drop on 250,000, saves me $183. I would probably do it.
Well, I mean, that's $2,200 a year.
Yep.
Over the life of your loan, that's $66,000 over the life of your loan if you're holding onto that property for 30 years.
Yep. Yeah, and also too, part of the closing cost is going to be your 0.5 point VA funding fee. So you got for every Earl you do, the VA still charges a funding fee, but it's a 0.5 point, so that's factored in there as well.
So everybody who's paying attention to this scenario, just this one on screen, tell me in the chat, is $183 a month enough for you to refinance? You can just say yes or no, based on the costs that go into it. We're getting lots of no's, some depending. Tell us what number would make sense to you. All right, we can go to the next slide.
Now, keep in mind on that though, that again, going to your servicer, going to, your current lender, again, your rollover costs could be substantially lower, right? So again, that changes your payment savings and makes it, a little bit more edible. But this gives you a good baseline though. It tells you, okay, we already know 1.25 is 183. If I want to be saving a car payment, then I know I realistically need to be into the mid to low fives before I'm willing to even go through the process.
So everybody take a screenshot of this page if you can, and think about when you're ready to consider refinancing, these are the things you need to be calculating. And I'm getting a lot of people saying 400 would make sense to me. Multiple people have said that. And Lindsay says it's because we stay in the home for about 3 to 4 years.
Yep.
All right.
And that's good. That's the kind of conversations you need to have before you go and start doing 45 streamlines.
You need to know where you are. Yeah. I think for me, 300 a month would be worth it. That's kind of where my number is. Let's look at the cost over time. Yeah, you got it. Here we go. Bryan, tell us what we're looking at on this slide. Walk everybody through this.
This is an example of if someone decided, hey, listen, I want to keep this property for the long haul, and I'm going to go ahead and rent it out. So Kimber talks a lot about passive income and becoming an investor. And the great part about, the VA home loan benefit is that you have very little out of pocket, right? Very minimal. So as an investor, your cumulative cash on cash return, as you can see, can get up there pretty fast, pretty quick. Someone who puts 25%, 20% down, depending on investment property type requirements, maybe even more than that, their, cash on cash return would be significantly lower than this. And it would take a lot, maybe you're talking year 6 or year 7, maybe year 5, just depends. So this scenario specifically is somebody who purchased, I think we had the scenario in San Antonio for like 260, $3,000 out of pocket coming into the house. So you can see by year 3, the positive cash flow is already there. And then by year 10, it's 486%. And that 486% is based on your initial cash investment, right? So if it costs me $3,000 to buy this house, and I'm making $14,592 a year by owning this house back into my pocket, that's a 486% return on my initial cash investment. So as you can see in this scenario, assuming that rent continues to rise and that the property values, etc., and that it's a strong market and you picked a good spot and location, this would be a good positive opportunity for someone to become an investor.
Thank you so much. So I love this slide because it makes me visualize this more as a long-term game. I think a good goal is to try to keep that home for about 10 years to see the best result on it. And 10 years, I'm telling you, it's just like here and gone before you even know it. Like we're almost at our 10-year commitment, and I feel like my husband just signed that paperwork yesterday. It's been crazy. Michelle, will you please drop the booking link? On this page, you enter your information and then you get to schedule time with Bryan's team or with me to talk about your personal situation. Bryan for lending, me for real estate questions and a real estate investment strategy, looking at, what your family is going through. So there's the booking link there in the chat. And all you have to do is click that and then move through to scheduling. So page 1 is gathering some info. Page 2 is allowing you to schedule directly with us.
Hey everyone, thanks for your time. Really appreciate learning about all this today. Hopefully I'm one of those younger people in the group. You said you want to get the younger people start doing this. So the first question I had was you guys kind of said it kind of threw my head for a loop. I always knew you could use a VA loan more than once, but I was kind of told and under the impression, basically how I was explained was like, you can use your VA loan, you get a house, that's the one that you're gonna live in for at least a year minimum. But like, I was kind of under the impression you can only use your VA loan one at a time, right? Like it's not until you sell your house that you used it on that you can then use it again.
Yeah. So George, and that is kind of one of the, misconceptions that's constantly been floating out there. But let me tell you why that conversation happens quite often. It's because most individuals buy houses now on the veteran side of things that are extremely expensive, right? And so when you buy something that's $5, 6, 7, $800,000, the reality is you can't use your VA. You could use your VA loan again and still hold on to this property if you wanted to, but you would have a sizable down payment on the new house. So people always say, well, hey, listen, if you want 0 down, 100% financing, you got to sell this property. But now you're talking about the other half of our demographic, which is the active duty military folks, right? And they're in markets where where they're buying houses that are in, 250, 300,000. Well, they can have that house and then they can buy another house because the entitlement, which is a weird math game. So if you ever want to know, I can bore you to death with it on a one-on-one. But once you understand it, it's really simple and easy. But this conventional loan limit number that our real estate and our housing industry throws out on an annual basis helps identify how many houses you could technically buy with 0% down, right? If you bought a house here and you said, hey, I got to relocate, or I'm going to have a family, I need a bigger house, or older, I'm downsizing, or my work's relocating, you technically, by the rules of the road, could have more than one VA loan at a time.
All right, that's a big myth debunked for me. That's good to know. So basically, you can have 2 active VA loans. Okay.
Technically, you can have more.
Oh.
So, and I'll expand on this too. Entitlement is based on your geographical location. Okay, so are you active duty or reserve or veteran?
Let's say if I had the money right now, could I buy a second house on the VA loan? It would only be my one and only active VA loan, but if it's not my primary residence, could I still do that?
That'd be your primary for at least
a year, right?
I think it's 24 months. Yeah. So that's
yeah. You have to intend to occupy, and you have to occupy the house. If it's a very murky road when you try to leverage. And listen, some people buy duplexes, they live in one side and rent out the other, and then eventually as their family grows or whatever, get married, etc., then they move and now they got a duplex that's under the VA home loan benefit, and they keep it that way. So there's definitely mechanisms you can leverage, but number one, you have to occupy the house as your primary residence, rule number 1. So
on that timeline, I know that there are some conditions, Jordan. So like life events are a condition, birth, death, deployment, those kinds of things might allow you to leave the home sooner.
Blue Water Navy law that went into effect in 2019, actually was passed in 2019, then went into effect January 1, 2020, actually removed loan limits from the VA home loan benefit, right? What does that mean for anybody out there? That means if you wanted to go buy your forever home, you're about to retire, you want to go buy your forever home, and you didn't have any active VA loans, you could technically buy a house at whatever you could afford and the lender's willing to lend you. 1 million, 2 million, 3 million, 4 million, whatever, right? That's the benefit about no loan limits anymore. Now, take a step back. If you bought a house, let's say in San Antonio, we're just going to keep using San Antonio, for $250,000, let's just say that as an example. Now, wherever you go to next, so Kimber, you're right. Whenever you go to next, now the county in which you're moving will dictate how much you can purchase with 100% down. So as you can see, every year, the conventional loan limit that's set every year has gone up significantly. I remember when I first bought my first house, it was $417, and now it's going to be $806 going into 2025. That's crazy, right? But while they keep raising that, that allows you to execute on an additional VA home loan right? Because you can still get 100% financing. So the county in which you're moving to's conventional loan limit will dictate how much you can buy at 100% with another active VA loan. Does that make sense?
It does to me. Any questions from anyone else? Thank you for clarifying. So I hope that kind of, it's complicated, but the answer is the VA loan is a much more flexible and useful tool. And if someone says, you can't use it for this, you probably just need to call me or Bryan and let us help put you in touch. Can you touch on, this is from Janelle, our big $ commenter, Janelle. Can you touch on what you can use the VA loan with? I thought it was only for homes, but I heard you can use it for empty lots, new construction.
Okay, so there is some thought around, so VA will not, lenders are not going to lend on empty land, right? So you can't buy property, just land with a VA loan. Now, having said that, there are lenders out there that offer what we call one-time closes, right? To where you can do a new construction on land, to where now you can package it all together. Again, can't buy land with a VA loan, but you can do, a one-time close, new construction loan, using the VA home loan benefit, which is finding the lot and then finding the builder and marrying the two. There's only a couple lenders out there I know that do that, which I'm shocked, because you would think there would be a lot more of us that do it. But there's only a couple of them, and I'm more than happy to share that information with you.
Ange asks if it is a good idea to refinance. She said, we just got our home using the VA loan a little over a year ago, and we do want to rent it when we PCS.
So with that being said, right? So obviously right now the name of the game is get your payment as cheap as possible so you can positive cash flow every year. Now it would just come down to timing, right? So, right now, where are our rates? Where do we forecast rates to be? And just see, you got to go with your specific scenario. So my suggestion would be, let's have somebody run the numbers and just see where you need to be from a interest rate savings perspective to save the type of money that makes sense for you to do it. So, if the numbers work out, like if rates swing one direction and you're saving, point and a half, then any time's a good time to refi.
Right? I would agree with that. So I would say this week is not a good week. No. 3 weeks ago, the rates were down to the 5s. This week, they're in the 7s. So I think you want to wait and on what the number is of the week. My recommendation would be build a good relationship with someone like Bryan and his team so they can call you and say, hey, this week is the week to pull the trigger. We
could run some scenarios and just see, where it needs to get to for that number to make sense. And then, we check on it weekly, Yeah,
exactly.
It's a sick game.
Micah asks, what's the best information you can give me on using VA loans to collect properties as we PCS?
Well, don't buy a very expensive home first, because if you do, then you won't be able to buy multiple properties without having a substantial down payment. So if the goal is to have very minimal money out of pocket, then finding very, bang for your buck type homes in good areas is what you want. And make sure you purchase within your means, which is always state advice to everybody, and you'll be able to buy multiple homes. So the good news is the conventional loan limit seems to be going up every year significantly to help offset, or to keep up with the appreciation values that properties have been facing. And we're probably going to still be in a pretty low inventory, high demand market over the next couple of years. So, realistically, as you PCS, you should be able to get 2 to maybe even 3 properties out of your home loan benefit. But the key, and I think Kimber, you even said this earlier, making sure you purchase within your means, and the very first one sets the table on what you're going to be able to do next.
Yeah, and that's a tough one for me because I encourage you to purchase below your means if you know you're not staying there. If you know this is not a forever place for you and your concept 100% from the beginning is to build a rental property out of it, purchase the least expensive home that you can get by on. And that was tough for me because we're at a stage of growing our family. And so we grow out of houses quickly. Every time we add a kid, we need more square footage, and that can become difficult or tight, but that's still my advice. Any advice for jumbo VA loans? We own a home, VA, and want to buy another one, but the market prices may price us out of what we have been told we can buy with a jumbo loan. And this is from Gina.
So look, I have to ask a clarifying question on this so I can give the best advice.
Okay.
So are we saying that when you move next, when you PCS next, you will sell your current VA home loan? So let's say that is the case, to make this really easy, right? Again, going back to the Blue Water Navy law that went into effect, that got passed in 19, went into effect in 2020. If you do not have an active VA loan or going to sell yours before you move into the next one as you go, because typically markets are hot enough now where you put a for sale sign in your yard, you got to time it right so you're not homeless moving into your next house. But you should be able to purchase whatever you can afford and whatever the lender is willing to lend on your next VA home loan, assuming you don't have an active one. So the term jumbo is anything over the conventional loan limit, pretty much, right? It's considered high balance jumbo, whatever the fancy word is today. So you should be able to go to whatever you can afford with no down payment.
I've been told that anything over $400,000 is considered a jumbo loan. Just in general.
It's anything over the conventional loan limit. So it used to be it used to be that because the conventional loan limit was 417 back in not so long ago, actually. But conventional loan limits are kind of set now. So anything that would exceed that, to me, would be considered a high balance.
Gina, I would encourage you to book a call with me and book a call with Bryan with me because I have 2 VA loans and one is a jumbo loan. So I have personal experience going through this recently, and I would be really happy to share with you anything that we faced. And then Bryan probably needs to get to know your personal situation a little bit more before he can give you more clarity. Janine, let's see here. That was Celeste says, what are some fees or are there fees or differences when you use a VA loan the second time?
You got the your funding fee increases significantly compared to the first time. So the first time use is like 2.15. Second time use is, I want to say 3.3%. So it goes up a little bit versus the first time. So that's something to be aware of. You're not running from the VA funding fee unless you're exempt due to a VA disability. So that's really the big fee.
Thank you, Bryan, for clarifying that. SB wants to know, there's a home that has a laundromat included for sale. Is this something that I could use a VA loan for?
I feel like this is a lender that's on this call that just wants to test my knowledge. So, no.
Well, SB Trevino, are you a lender?
So, funny enough, you can purchase mixed-use properties with the VA home loan. I do believe, and I'm dusting off my knowledge here, mixed-use property, I think it's 75-25, residential versus commercial, right?
Okay.
So, and that is 100% dictated by square footage. So, but there's a couple other things that are involved in that kind of a purchase. So you want to really make sure that you talk to a professional and a lender to ensure that it meets the specific requirements of mixed use within the VA guidelines.
Okay. I learned something new every time I talk to you, and mixed use is amazing. Thank you. So yes, SB, you can buy a mixed-use property. It must be 75% dedicated to your primary residence and only 25 dedicated to your business. And you can use your VA loan. Woo! All right, Carmen says, Bryan, for reservist families like us that move every 12 months, do you still think it's a good idea to buy?
Move every 12 months. Here's one of the things that, everybody's situation is different. And, if I personally was moving every 12 months, I don't know if I would be in the game of purchasing every place I went. Now, the great part about the way the VA home loan works is the family can satisfy occupancy, right? And so in the Navy world, we can live on a ship. We don't have to drag our whole family with us. Or live in the barracks if it's available. We can geo-bachelor it, and the family can stay somewhere where they can stay grounded, rooted, and go to good schools, etc. So that's a unique scenario right there. I don't think I would be trying to buy every single place I'd went to. I would just, if I planned on potentially coming back to this spot and living there, that would probably factor into my decision. But I don't know, unless one of the rotations was my hometown. I don't know if that type of scenario would be conducive with becoming a property owner in every single location.
And I would elaborate there that, a PCS or a relocation does count as a life event. However, when you are ready to sell that property, if you have not occupied it for at least 24 months, and I don't think that has to be consecutive or concurrent, you have to pay capital gains tax on it, I believe. So I think that kind of gives more context to why you wouldn't want to use that PCS or that change of station as a life event. Now, you can roll your capital gains tax into other properties, but that gets a little complicated. So I like Bryan's suggestion of if you think you're going to be back, or you can leave someone occupying it for that 24 months. That's a good idea. All right. Maya, I'd like to know how big the funding fee is to have a second VA loan going at the same time as the first. I have a VA loan now, but when we PCS, I would like to buy again, but keep our current property. I definitely don't want to lose my current 2.5% interest rate.
Well, you keep your current VA loan, you keep your rate, which is great. I didn't mean to rhyme there. And when you move into the second one, your funding fee will, like I said, it'll go up. So the first time use is 2.15, second subsequent use is 3.3, I do believe. Yep, 3.3. So that would be the funding fee that you would have to pay when you purchase the second time using a VA loan. So, and that can be rolled into the loan, by the way. It's not like it's coming out of pocket.
Thank you. Janelle has questions about property managers. Janelle, I think we need to have a separate conversation in general about becoming a landlord and being a property manager. So I invite you to book with me, but I also think that would be a great topic for another Coffee Connect in the future. But her question in general is, should we use property management companies? And I'll personally answer this. I don't for my rentals. I know a lot of, and I've never met anyone who's been 100% satisfied with giving away 10% of their gross revenue and has enjoyed the service that they got from their property management company. That is a friend-to-friend piece of advice for you. I'm not discouraging you from doing it because it still may be the right path for you. I am a landlord and I manage my own properties. I would be happy to discuss how that works for me. All right. Michelle asks, how much passive income do you get from your 6-year investment property? So I think this is for me. Passive income, we are making around $500 a month on that property. And my family, our rule of thumb is we don't touch it. It's not spending money for us. It's not vacation money for us. That money goes into an account to take care of issues on the property. And for example, I had 3 years of that saved up, but when my last tenants moved out, that property needed new carpet and new paint and a lot of little tiny repairs throughout. That's what I spent the money on, and still had a little bit of cushion to pay the mortgage while we waited for a new tenant to take occupancy. When they move out, we're going to have to do the same thing. And, ultimately in 15 years, we're going to need to put a new roof on it. So we use that money to protect the investment. The ultimate way that we're going to enjoy what we've invested in is when we sell the property. When we sell the property, whatever we have left over from having rented it for however many years we rented it, and the net proceeds from the sale will be a big addition to our retirement account. Now, that's renting a single family home with a very small yield. That's a very small amount of profit each month. And there are definitely other markets where you can do better. And if I would have earled that property, I have a 5.5% interest rate on that property. If I would have earled that a couple of years ago when I had the opportunity but missed it, my profit would be larger. So I hope that answers your question, Michelle. Adele asks, are there any extra benefits with the VA loan from someone? $100 TNP. I don't know what that means. I'll put that in the chat. 100% TNP. Maybe that means disabled. That probably means if you're 100% disabled, are there any additional benefits for the VA loan? Total and permanent.
Well, you don't have to pay the funding fee. So that's the first, the number one benefit. You don't have to pay the funding fee. And if you're 100% disabled, this is where having a good team working for you when you're buying houses, your realtor and or your mortgage professional both should be pretty in tune with local real estate taxes and the counties, because if you're 100%, some counties do 70 and above, but there's a lot of counties out there that when you're 100% total disabled, you don't have to pay any property taxes.
Thank you. Tax exemption as well, Kagan says. Thank you, Kagan. Janine says, when does the passive income generally start to flow in? I love this question. Well, if you're renting out your property and you're pricing it correctly, as soon as you sign a tenant, that's my perspective on that. Bryan, do you have anything to add?
Well, I do believe that typically you have costs the first year or two, right? That getting the house right, getting, paint, whatever you need to do to make it, for new tenants. So I agree with you. If you price it right, you technically you're a positive cash flow from the first payment you receive, but I think you probably break even on your initial investment, getting it ready to rent probably by year 2.
Can you refinance your home on a traditional loan to a VA loan?
Yes.
We got out in 2023 and interest rates were high when we purchased.
Absolutely. Yeah, absolutely. But it's considered a cash out transaction in the VA world, right? So, I'm just giving you kind of the name and what they call it. And, the funding fee, obviously you'd have a funding fee, but rates are substantially lower. And, you're in a loan right there where you can take advantage of the streamlines down the road again. So we see a lot of people doing that. Especially going into a low rate environment, you'll see a lot of people moving from conventional to VA, taking advantage of their earned benefit. So,
okay. Thank you for clarifying that. Deborah wants to know where she can keep track of interest rates.
Ooh, that's a good question. Outside of the mortgage world, you know what? You could just Google, go to bankrate.com or whatever and just kind of see what everybody's offering. There's a lot of websites out there. If you just Googled current mortgage rates, that'll take you to a couple spots where there'll be a bunch of lenders advertising interest rates. Or you can just send me an email and I can tell you what the average market rate is for the day.
I have a trick for you. Because when you Google things, you get sucked into lending companies' funnels. Okay, they pay for SEO, they pay for these landing pages, they put them up because they want you to click on my VA loan calculator. And I'm advertising with the brand name veteran. So if you're a veteran, I'm obviously the lender for you. And you just get sucked in to the wrong places. So here is my trick, Deborah, and for everyone who wants to watch interest rates. In your Google search bar, you are going to type in today's VA rates. And that is what you're going to go by. Google is going to automatically generate what today's 30-year fixed VA rate is. And you can change it for the down payment down to 0, and you can adjust it based on your credit score. Do not click anything. Do not ever click anything, because you're going to get pulled into a website that's going to send you through a calculator. And by the time you get through that calculator, you got to provide your email and your phone number. And the next thing you know, you are getting robocalled night and day by some company that wants to try to get you in their VA loan list. So beware. And also, if you just need help, you can contact me or Bryan. All right, Bryan, what are your thoughts on an assumable loan? This is from Jennifer Kellogg.
So obviously when rates were, everybody who bought with rates significantly lower, the attractive thing about listing your house for sale now is, especially when you got VAs, you can make it assumable. Now, there is some risk involved in, letting someone assume your loan, because they don't have to be, entitled to the VA benefit to assume your loan, right? So let's say, for example, I have a property, it's at 2.5%, and Kimber has no affiliation with the military, and she wants to assume my loan. She can. However, now my entitlement is still with that property until Kimber sells it, right? So my risk is that if she decides, or something catastrophic happens to her and she can't pay her payment and it goes into default, I lose all my entitlement. I lose the entitlement that's attached to that property, right? So there are some risks when you go non-veteran to veteran assumptions. Now, if I'm a veteran and she's a veteran and I want to assume her loan, we can do a transfer entitlement. And then she gets her entitlement back, and then we move on. Now, there's another caveat to this, and that is because properties have appreciated so much that the person who's assuming your loan, say if I bought it for $300, but it's worth $500, they have to figure out secondary financing or have a substantial amount of money to put down on the property. So it's very attractive, especially right now with rates so high, but there are some risks involved, and more than happy to, talk to you about those one-on-one if this is something that you want to do.
Thank you. It's a great thing if you can make it work. Arcega asks, can you EARL on a house that you don't currently live in? So you've already been there for 24 months and left. Can you still refinance it?
If it's a VA loan, yes, you can. You can EARL a property if you don't live in it. Yes.
Thank you. All right. Getting down to SB asks, I'm a veteran and my husband is active duty. Does that mean we can only each use, how many VA loans can we open?
When you have a household that has the opportunity where everybody's entitled to, the VA home loan benefit, you could exercise each one independently, which I strongly suggest, because it's a lot more flexible, especially if you're PCSing. If one person uses their entitlement, now, you have to both be employed, working it like that, but it does work out a little bit better if you use one person's entitlement, then use the other person's entitlement when you move to the next market. It just seems to work out. When people go 50-50 into it, all that does is, not only reduce your opportunity, but it also increases your risk, because let's say, God forbid, something happens where you divorced or whatever, now your entitlements are all beamed up together on one house. It just works better when you use them independently, in my opinion.
Thank you for sharing that. That's a really good situation to be in, SB. If I am buying to invest like a landlord, would it be wise to buy a home first to live in before considering investment properties?
If you're going to use the VA home loan benefit, that's the route
you have to. Yeah, Tracy, if you are using the VA loan, you have to buy the home and live in it first for at least 24 months before you can consider the additional properties. And they do technically have to be primary residentials as well, which is, why it's a good technique for families PCSing. All right, what if we buy a home with the VA loan, but then we have to PCS sooner than we thought? And this happened to me and my family. We had to PCS within 9 months of buying our home, our first home. Do you want to speak to that, Bryan?
That's acceptable. Um, technically speaking, you only have to, active duty military, you have to, I mean, there's a weird thing with it, but it's because this happens all the time, actually, more than you can count, where somebody, they buy a house, they're comfortable in the marketplace, they finally decide to buy, they buy, and then lo and behold, either a promotion happens or something gets picked up or something like that, and then all of a sudden now that person has to PCS and go somewhere else due to job change or whatever, and that's more than acceptable. So just
Yeah.
remember, you have to have the intent to occupy when you're using the VA home loan benefit.
Thank you. Katie wants to know, does a deployment count as a life event? And if so, how long does the deployment have to be?
I don't know what the specific requirements are on a deployment timeline. But give you an example, the most deployments last a minimum 180 days if they're really considered a deployment. And that's more than acceptable. Again, the family can satisfy occupancy. So if someone's getting sent overseas and the family wants to buy a house back home where their family is, that's an acceptable situation right there to do that.
Yeah, and on that note, so for example, my husband is considering going on an unaccompanied tour for his next tour, which is overseas. Does that mean that I can leave where we're currently stationed and go buy a home somewhere else with the VA loan?
Yeah, so if you want to say that your hometown
Yeah.
was let's just say St. Louis, Missouri, right? And your husband's
Right.
moving, and you have the entitlement to do it. You guys decide to purchase a house in your hometown because he's going to be gone. Yes, absolutely.
Yeah. Thank you for clarifying that. In your experience, what are some reasons someone may be denied or receive low funding for the VA loan? And she's referencing Jordan was our first question asker today. She's referencing his scenario.
So I'll give you an example of low fund. So we'll just call it minimal purchasing power. And this is something that I've been very vocal about on all my social media platforms and stuff when I see it, is because what people aren't considering right now is taxes and insurance has significantly increased over the last 3 or 4 years, to get into the point where it's making what used to be opportunities to buy very difficult for the average American, right? And give you an example, insurance is up probably 40%, taxes are up at least 25-30% in every market. So if your escrow payment is $700, $800, $900 a month because of the county in which you're living in, that substantially reduces your ability to buy a house, right? Because for every dollar you're spending on something that it eliminates your purchase, because that's all considered into your debt to income ratio and payment factor, right? So if it used to be $250 or $300 for an escrow payment in that county 5 years ago, and now it's 7 or 8, now your opportunity shrinks significantly to where maybe you could have bought a $300,000 house, and now all of a sudden, because the escrow payment's so high, now your ability is $150. So the higher the escrow payment, the lower the actual purchase price if you're working off a fixed income, which military is basically, right? So those are the things that we see that significantly impact the ability to buy in certain communities for people.
If you. Scrolling up in the chat, we have a attendee today, Vero, who wants to know, can I get a VA loan if if my income is 1099?
So obviously you'd have to have 1099 income for a specific amount of time and show a history of being a 1099 employee. And we can work through all those scenarios with you. What we see, which causes some problems sometimes, is you have someone who, was salaried employee at the bank for 5 years and then decided to open up their own, a company, or they became a contractor, self-employed contractor doing some other stuff that's totally outside of what they've been doing the last 5 years. And then you need to have a history of doing that for it to be considered acceptable and the likelihood to continue, right? And then everybody wants to see, it on the tax returns and appropriately identified as positive income. So, but the short answer to that is yes, you can. You just have to have a history of it.
Gotcha. And Lindsay Pate says, we bought a home and just retired. So I'm assuming just retired means in the last 90 days. She said that we just really dislike the neighborhood and we need to get out of the neighborhood. How soon can we sell or rent? Ideally, we'd like to be out in the next 7 months.
I mean, this is your wheelhouse right here.
I was scared. Lindsay, I think I need to know a little bit more information. So I invite you to book with me. I need to know more details about when you bought, when you retired, what kind of loan you have, etc. So booking link is in the chat. So book with me, Lindsay. Let's see here. Bryan, we have some people signing up to book with you. They want to clarify, what can they discuss with you? Can we give you income and buying zip code specifications? Do VA loan experts have to be licensed in the state you're buying in to help you?
Great news is my team covers just about every state. So we have you covered there. And if we're talking generalities, then we can talk, we can talk general scenario, or we can talk specific. And if you're specifically going to a market that, like Missouri or whatever, we would ensure that you would talk to one of our professionals who is licensed marketplace. It's always good to work with somebody who's licensed in that state, because every state has different nuances to it from a closing perspective, like with attorneys and certain tax stamp fees and stuff like that. And if you're going to talk specifics on how much it's going to cost me to buy here, it's always nice working with somebody specific to that state, because they can talk about all the different types of fees you may or may not have to pay buying in that certain state. But everything's on the table. So anything military and veteran related is on the table with me.
I love that. Thank you, Bryan. Adriana says, we're under the impression that new builds are easier to get a loan for. Is this a rumor, or is it just a suggestion to make closing easier or less costly?
I think new construction is the safe play these days, because they're the only people creating inventory, right? So if you think about it, I mean, most of the inventory right now is coming from new construction. But I don't think it's easier it's just as easy to buy someone else's house as it is to, buy a new construction. And if anybody's ever built before, I can tell you, you either stress out for 60 days moving into someone else's house, or you stress out for 6 to 8 months moving into a new construction. So there's that.
And I'll add, Adriana, that the new build communities, they're doing the mass production. They have a lot of inventory, but they also typically are giving you their own in-house lender. And so what we're really seeing there is the in-house lender is actually owned by the same company that's selling you the house. So they're making money off of your transaction 2 ways. That can benefit you in some ways, but there are definitely pros and cons. And I think that you should speak to a realtor about what the pros and cons are, because there are pros and cons of living in a new build, fast construction home. And there are pros and cons of working with their title company, their lender, their realtor, etc. It's set up to benefit them. And not that that's a bad thing, right? It's a business transaction, as well as, for you, it's an investment. So sometimes that can be the right thing for your family, but not always. So definitely get with a realtor. You can book with me and I'm happy to go into specifics with you. But definitely we want to speak to a very seasoned realtor who can help you determine if it's good for you or not. And I think we may be at the end of the questions. If not, there may be a couple of extra in the chat here that just came in. Can you use the VA loan to buy homes in other countries?
No, not that I'm aware. Like you can in Puerto Rico and Guam because they're U.S. territories. Uh, but outside of that, no, you're not. I don't think you're not using the VA home loan to buy property in Stuttgart. Even though, hey, if you could, I would. I would have already attested that.
Nice. And we're finished. We got to the end of the questions. So thank you, everybody, for hanging in there. We do have a very generous sponsor who made this available today, and that is Expert Voice. And I want to take a minute to highlight them because I don't think you guys just understand how much this organization benefits military families, and having a membership with them benefits you as a family. So I'm going to bring on Emily Keating. She's the VP of Growth at Expert Voice, and she's going to talk to us about the membership. But before I do, I want to first tell you, number one, they're responsible for this event and for making it come to life, for the reason for funding it so that we can all be here today. Emily, tell us about the Expert Voice membership and why it's such a great benefit for military families.
Awesome. Thank you, Kimber. And hello, everyone. As Kimber mentioned, my name is Emily Keating. I'm VP of Growth here at Expert Voice. Thrilled to be here today with my colleagues, Nicole and Adam. And we're really excited to share a little bit about Expert Voice, the exclusive benefits that we offer to the military community, and how you all can take advantage of them. A really big thanks to Kimber and the Move Me team for having us here today and helping us spread the word. So at a very high level, Expert Voice is an e-commerce platform where military members, spouses, and veterans can access exclusive discounts from over 700 top brands. These brands include Vortex Optics, Garmin, Oakley, Brooks Running, Stanley, and many, many more. Brands offer these discounts on Expert Voice as really a way to show their appreciation and support for those who serve. It's completely free to join. Really all you do, and we'll show you how, is to sign up and verify your military credentials to gain access. And then you can start saving on brands that you probably already know and love with discounts that you really can't find anywhere else. Nicole, what am I missing?
I think it's worth mentioning just the wide variety of different shopping categories that you can find across Expert Voice. You'll find incredible savings on everything from outdoor gear to apparel, nutrition, fitness, golf, and so much more.
I wanted to ask Kimber and team, so you all have been using Expert Voice for some time now. You talked about the Stanleys. Are there any other finds that you think are worth sharing?
Yes, and I turned my background off really quick, and the team is going to go too, but fast while my background is off. If you're over 30, you know collagen. All right, Bubs, it's founded by a Marine. This is a military-owned company. And when you use the Expert Voice platform, it makes you take like a little quiz to learn about Bubs. I was in tears after I got through. I'm going to tear up talking about it. Oh my gosh. He named it after his fallen battle buddy. So you guys should go check out Bubs Collagen on the platform. I'm going to stop there so I don't tear up. And Keen, these are for my kids. I accidentally ordered 2 pairs. That's why I have a box right here not in use. But I send my toddler to school in these for soccer shot. And then my husband and I splurged and we got matching Costa sunglasses for our anniversary this year. So that's me. Who wants to go next? Oh, and I say splurge, but we still got them $300 off. They were like they were 60% off the Costas on flash deal. So you got to get your Expert Voice app on your phone like quickly.
So I couldn't bring my pellet smoker into the meeting today, but Camp Chef did give my husband this awesome hat. And when he opened the box, he found it and put it on immediately and started assembling our pellet smoker grill. And we got the one with the Blackstone attachments.
Yeah, and I see people asking for the link. Hold tight. We have a special one because Emily has a special offer she's about to give. Katie, you want to go next?
Yes. So the team knows I am watching out my window like a hawk today for my new Cotopaxi bag that I got on the flash deals last week. So I don't have it yet, but it's out for delivery. So I'm really excited about that. And then my other big line that I would not have purchased if it wasn't for Expert Voice is my binoculars. So I live in Northern Washington, really close to the coast. So I'm always constantly watching for kind of nerdy maybe for some people, but we've got orcas out there and whales and otters, and so I can see them from my deck. And so would not have gotten those without Expert Voice.
Jenna?
Sure. Yeah. Okay. I love that Emily mentioned the flash deals. I jumped the second I heard Brooks was on sale. I got running shoes for me and my spouse, 50% off for our shoes, and you never see discounts that big on Brooks. Also, I got gator waders. If you need rain boots, let me tell you, they are cute, they are comfortable, they are lined. I live in an area with typhoons and rainy season. They are so practical, and I wear them as part of my everyday outfit. Random brand to share, but so excited when I got those.
Thank you. Back to you, Emily.
That's awesome. Thank you so much for sharing. I'm even hearing more brands that I need to go and check out. So for everyone on the call today who's not already a member, we'd love for you to join. We're doing something really special today. Everyone who signs up through the unique link that we'll drop in the chat in a second, you will receive a $20 coupon to use on your first purchase on top of all the discounts that are already available to you. A final reminder, every single person who signs up today through the link, regardless of whether or not they were on this call, will get the $20 coupon. So copy it, share it with your spouse, with friends. I promise it's so worth it. And thank you so much for having us today.
A little bit about our relationship with Expert Voice. We try to bump you guys and let you see what flash deal is happening when we see them. So if you are subscribed to the Move Me Military MLS newsletter that we are sending out every Tuesday, we typically send out what the flash deal of the week is there. And also, don't forget to go grab that discount, that 50% off on the Stanleys. Go get a couple, give them as Christmas gifts to your loved ones. Treat yourself. I will tell you, I went overboard and did a really big, massive order on the Stanleys, and it got canceled. So be diligent with not doing bulk orders there. They know if you're over purchasing. Although I have to say, all of mine were for me. Don't want to judge me for that.
Stanley bulk order is acceptable.
Yeah. Well, I have 2 daughters, so we were getting a few matching options. Thank you guys so much. And there's the link one more time. If you have not signed up for Expert Voice, go ahead and do it now because you will get the $20 coupon. And at the end of this call, we're going to do the $5 Starbucks giveaway. So there is still more to win and more to take advantage of if you guys are staying on. Thank you, Expert Voice team. I think that's it. I just want to thank you all for being here and for taking the VA loan and real estate investment seriously as a military family. And I'm also going to give you my link to book one more time. So this link will allow you to book with me or book with Bryan. I can help you with real estate strategy for your family, get you connected to real estate professionals in your area who can help you make your next decision. And Bryan can help you determine what the next steps are for you on the VA loan. I think I do also want to drop our YouTube channel. Can you drop our subscribe link to the YouTube channel? I want to encourage everybody who's still on the call and still engaging with us to subscribe to our YouTube. We are constantly putting out content like this on a regular basis. In fact, everything we talked about today is going to be repurposed into small digestible pieces of content. So if you're feeling like you want to revisit the topics that we covered, the replay is going to be on YouTube. And consistent content's going to be going out there. So I'd love for you to follow us there. Janelle, we're not really big on Instagram. We're primarily on the tube. We also have a podcast that's just audio if you want to follow on Apple or Spotify podcasts. So I'm going to give you that. So right there, bit.ly/VF-TV. bit.ly/VF-TV. Go subscribe to us on YouTube. You can engage with some of the content on real estate that we already have up. There's a whole playlist there called Invest. And there's also a whole playlist there called Peace, where we have real families talking about their experiences at different duty stations, PCSing and investing in real estate. And you can actually just garner inspiration from other families who are doing this. So the coffee is in the comments And I'm going to give you the Expert Voice link one more time. If you want to sign up for Expert Voice, you can still take advantage of the $20 coupon by signing up at that link. And thank you. So thank you so much, Bryan. Time is super valued. We're honored that you would take the time out of your vacation to sit and educate with our community. And from all of the attendees here today, thank you. If you guys loved Bryan, go ahead and I want to say give some emojis in the chat, but I'm afraid it's going to blow up and we're going to lose all those links. You can give some emojis in the chat. We'll repaste our links. Thank you, Bryan.
Thank you.
Thank you so much. And then when all of those emojis settle down, I'll get my team to repost those links. So thanks to everybody who's still here. Deborah's trying to get back in. Let me add her in. Deborah, we're all signing off, but you can catch the replay. All right. Much love, you guys. Send us an email and tell us how you like this event. Reply to any emails that we sent you. Send us an email. Give us your feedback. We want to know what you thought about this. We want to know if we can improve. We want to know if there are topics that you want us to cover that we didn't cover. All right, that's it for this episode. I hope you can walk away with tangible resources and information that will help you take the next step in your real estate investment journey. Remember, you can always reach out to me and my team at the link in the show notes if you need a little bit of extra help.